In this webinar, I will demonstrate how to enter details to build a cash flow plan. We will look at features and functionality along the way, including what the timing screen is used for and how to add, edit, and delete events, goals, and stages. This is going to be recorded and you will receive a recording after the webinar is completed. We are not going to open the webinar up for questions, but if you have any follow-up questions, we ask that you email us at support@planwithvoyant.com. My name is Jamie Phelps. I'm the Client Success Lead here at Voyant, and I'm also available to set up any individualized planning sessions or training sessions that you might need, and you can reach me again at support@planwithvoyant.com if you'd like to set any of those up. We're going to start out on our home screen, and you'll notice that I have the client privacy list mode enabled. If you're ever in a presentation with one of your clients and you'd like to have this privacy mode on so that you don't have a list of clients open, you can do so by clicking the profile icon in the top right corner, go to Preferences, and turn the client privacy mode to yes. You can also switch between English and French in this section. We're going to navigate over to our plus button in the bottom right corner and select Create Client. Here we are going to enter the name of our client, enter their date of birth, and we're going to enter in a plan start date. Now keep in mind Voyant works in full planning years, so each planning year is going to start sequentially. So if you start your first planning year the 1st of January 2024, the second planning year will start the 1st of January 2025, and so on it goes. You also want to make sure to select the correct province, as this will apply the correct provincial taxes to their plan. And you're going to want to note whether or not your client is retired, and if they are not retired, what age they expect to retire. And we're going to click Done to save this. Now it's going to open up a plan, and we're going to be able to build our case from here. I'm going to again go to my plus button in the bottom right corner, and you'll notice that this follows us throughout our planning in Voyant. This is always going to be where you go to input data. I'm going to plus button here and select people. I'm going to enter in Jane's spouse, John, and we're going to enter in his date of birth, and we're going to select whether or not he is retired, and if not, when he expects to retire. If you have any children you want to add to the plan, you can select this downward arrow and save and add another. In this example, our clients don't currently have any children. If we click the down arrow here below the chart, you'll be able to review any information that you've already entered into the plan. Now, the only thing we've entered so far is our 2 people in the plan, and whenever you enter anyone into the system, we will automatically create a default surplus account for them. This is just a nominal account that the software uses to hold any funds that have been not assigned yet. So for example, if they have an inheritance or the sale of a property or any kind of a large inflow that flows into the plan that you haven't transferred or told the software where you want that money to go, the software will hold those funds in this nominal account until you transfer them somewhere else. All right, let's go next to our plan settings, and I wanted to review this with you really quickly. If you are using a branded version of our software that your company has already set up, this may already be completely set up for you. However, if you're in a trial or you're setting up your own version for yourself, I would highly recommend going through here before you start doing any planning and make sure that this is all set up in a way that you agree with so that you're reflecting the correct values in your plan for your client. So you might go through here, make a couple of adjustments, and I would definitely recommend taking a look at each of these sections. I always like to turn on the CPP sharing and pension splitting just for the tax purposes, and then we're going to click Done to save those changes. And I'm going to go next to our timeline. We're going to go next to the timeline, which is right here. The timeline screen is the framework for the plan, so the timing of everything in Voyant is based on events. Anything that happens in a particular year needs an event. This is also a nice place to bring your clients to show the key life events over time in their plan. Some events are added automatically, like these retirement events. Those were added whenever we suggested that their expected retirement age would be 65. And then in plan settings, we have a mortality age set at 90. And then we can add in different events for their timeline to reflect what we're planning for. So a couple of things that I want to add in, if we hover over the gray area here, age 75, I want to double click and I'm going to give this an icon. Let's say we use the boat. I'm going to call this slowing down. I'm going to use this event to step down their travel expenses in mid-retirement. And then also at age 50, I'm going to double click here. We're going to do a kitchen remodel. I'm going to use this event to tie a kitchen remodel to this year. So we're going to click done to save. And now you can see in the events section, we've got the kitchen remodel. If you hover over it, it highlights it on the timeline. Same with slowing down and any of the other ones. Next, we're going to look at goals, which are trackable expenses. It's up to you what you categorize as a goal versus an expense. There is no hard and fast rule as to how to do this. I think of it personally as goals being future ambitions, things that they're working towards. So for example, I might enter a goal as their retirement spending goal, as something we are working towards being able to achieve. So let's select retirement goal. And we'll do $50,000 a year. This is what they've said they want to be able to spend in retirement. If you look at the timing section, you'll notice that if you select a retirement goal, it automatically will start at retirement and end at mortality. I'm going to save and add a second retirement goal. This is going to be their travel goal. We're going to start this goal out at $20,000. I'm going to go to steps and I'm going to use this slowing down step to step this amount down. So I'm going to add a step and step this down to $10,000 at age 75. Set that as my step timing and click done. So we'll model this as being at $20,000 a year until they get to age 75, and then it's going to be $10,000 a year. I'm going to click done to save those two goals. You'll see those here in red. They are currently in red at 0%, which means they're completely unmet. And that's just because we haven't yet entered in any income or assets into the plan. I'm going to next enter in a one-time goal, a milestone goal. So we're going to go again to our goals, milestone goal. We're going to do a kitchen remodel. That is going to be $30,000. I'm going to categorize this as a luxury goal because it is not an absolute necessity, but it is something that they are hoping to be able to do. So we're going to tie this to the kitchen remodel event that we have on the timeline, set that as our start event, and click done to save. Alright, so now we have our three goals here in the goals section, and we're going to go back to our dashboard, and you can see the expense profile starting to build up. We've got our retirement spending goal. Notice at age 75 that dips down a bit because we've cut the travel expense in half, and we have this little expense here in the kitchen remodel at age 50. Next, we want to go to my plus button here, and I'm just going to enter in as an expense, multi-year, their general living expenses in pre-retirement. So I'm going to enter this in as general living expense. We're going to do $50,000. Timing is going to be now to retirement. We're going to click and drag that into when the expense ends, and click done. And you'll now see the expense profile builds up in that pre-retirement phase. All right, let's take a look at adding in some income and assets. Again, any inputs, you're going to do those by going to the plus button in the bottom right. So I'm going to start by entering in some income. Select employment, and I'm going to do Jane's income first. I'm going to do 85,000, and I'm going to do save and add another, and John's 80,000. We'll click done to save, and we should now see the pre-retirement years. We have a bunch of blue. That blue reflects all inflows into the plan, so this is all their income coming in, and you can hover over any bar in the chart to see all the inflows versus the total need or total expenses, and the surplus, which is the difference, all of that unallocated income. All right, let's start entering in some assets. We're going to go again to our plus button, and we're going to go to savings. Let's enter in their rainy day fund. This is going to be jointly owned, so we'll add John onto the account. So rainy day fund, it's a balance of 20,000, no fees. It's a high yield account. They're not currently contributing to this. This is a fully funded account for them. Under withdrawal limit here, I want to change this from as needed, which allows the software to pull from this account, to do not allow. And that just tells the software, don't pull from this account, because I do want to treat it as a true emergency fund and not something available for liquidation. I'm going to click done to save that. And then let's go again to our plus button, savings and investments, and we'll go to investments. Add John, and we're going to enter in their non-reg account. This currently has a balance of 100,000, cost basis of 15, and they're contributing $250 a month to this. And if we go to update timing, I'm going to have this start contributions now and enter the contributions ending at retirement. And then I'm going to save and add another, and we're going to enter in a TFSA for John and give this a name. John's TFSA has 10,000 in it, and he is currently contributing the maximum. And we're going to update the timing for the contributions. Those start now and end when he retires. And just a note on the growth section, the growth is going to be based on what you set in your plan settings, less any fees, and then you can also change to a portfolio. You would just select use portfolio here, and then you can enter in an asset allocation instead. We're going to click done to save that, and let's enter in their RRSPs. Savings and investments, retirement savings. We'll do Jane's RRSP. That has a balance of 200,000. She's currently contributing the maximum. And we're going to save and add another and do one for John. Balance of 300,000, and he's currently contributing the maximum. We'll click done to save that. And I should now be in a pretty good position for retirement. You can see this is all blue, no more red. If you turn on the details, you can see what's being used to fulfill their expenses by hovering over any year in the chart. We've got non-reg dollars being used first, then RSP, and then here at the end we've got some tax-free savings. And we have not even entered in their state pensions yet. So let's go to our plus button again, go to income. We'll start by entering in their CPP. You can do a couple of different things: currently receiving benefits, estimate from income, as per last statement, or percent of max benefit. I'll just use estimate from income in this example, and we can have her start taking that a little bit later. And we'll do save and add another. John, I'll do the same thing, have him take it a little bit later, and click done to save. And then we'll add in their OAS, income, old age security, we'll estimate, save and add another, and estimate. Click done to save. And so now if we look at their retirement years and hover over the chart with the details turned on, we can see in purple we've got the CPP coming into the plan and the OAS, as well as their non-registered and RRSP. And the RRSP withdrawals look to be well above their needs. So let's take a look at Let's See single chart. And in here, if you turn on your legend, you are able to kind of pull things in and out of this chart to better get an idea of what we're looking at. So let's select Hide All and just look at the expense profile for a second. And then we can slowly start bringing some things back in. And if you want to start with employment in the pre-retirement years, you can see, they still have quite a bit of surplus income in most years. We've got CPP OAS in the retirement years covering the majority of their expenses. And then we've got non-registered and retirement savings. You can also move over to their assets chart. You can even pull out different items like their rainy day fund or any properties that they might have in the plan, and just hover over this chart. You can see at the end of this plan they are still expected to have $2.4 million left in the plan, so maybe they need to look at the ability to either retire early or spend a little bit more in retirement. They have some options here. So really quickly, let me go to dashboard. I'm going to enter in their property really quickly. Go to property, enter in their main residence. Before I forget, let's do 1 million with a purchase value of 600,000. Going to link their mortgage debt, and it is important to link this debt so that if you ever sell the property, the software knows to pay this back and stop those mortgage payments. So we're going to link a debt, name this mortgage, balance of 367,000, interest rate of 3.5, and their current payment is $1,500 a month. And the software is smart enough to figure out that payment duration if you don't have it handy. I'm going to click Done to save and Done to save that property. And the next thing I want to do is go to my insights, take a look at this as the retirement spending insight, just to get an idea what their maximum spend in retirement is versus what we have in their plan right now. We've got a maximum spending capacity in retirement of $122,920. Just a heads up, this is a today's dollar figure, so you might want to look at year view and go to their retirement years, go to expenses, and look at exactly what that figure is in retirement, and then it is going to be not including their mortgage payment or any fees on their non-registered accounts. And then, so that can give you an idea of one option that could be a what-if scenario for them, which would be them spending more in retirement. Another one might be retiring earlier, if that is something that they're interested in. You could create a what-if scenario, retire earlier. You have that in the top right-hand corner now, and we've got, go to our timeline, we've got our retirement umbrellas, we'll move those over to age 60. And now we can go to Let's See, Compare Plans Chart View, and we can look at these two side by side now. We've got Retire Earlier on top and the base plan on the bottom, and you can see in both plans we're still in the blue on both. We're not looking at any shortfall in either scenario. We can look at the assets charts. Again, we can turn on our legends and pull out the illiquid assets, and just look at liquid. And you can see even with retiring 5 years earlier, they're still looking at having 1.1 million left over at the end of the plan. So this does seem like something that would be a reasonable option for them. So this is just one example of something that you could present to your clients in a meeting with them. The next thing I wanted to look at is our reports section. So if you wanted to create some report sets before your clients come in, this could be something that you could just pull from whenever you bring them in. You can have them pre-populated, so all you have to do is create a retirement set, for example, and then it'll have those pre-populated. All you have to do is select them and generate the report. And to do that, you just create report set, give a name, and select the reports that you like. And that is it for today. I think that will do it for this session. If there's any questions that we didn't answer today, please feel free to reach out to me at support@planwithvoyant.com. I'd be happy to set up some individual time to go over a plan with you, or any questions you might have. Or if you'd like for me to look at a plan that you're working on and have questions about, you can click the name of your client in the top right, request support, enter your question into the text box, and share client access. Please join us for our next 2 webinars. We've got one on using Voyant as a presentation tool and one on modeling holding companies in the Canadian software. Thank you for watching and listening.